guys, this is Mommy Beluga Investing.
Hi there, back again with me Rati and Mami Beluga Investing. In this video, I'm going to analyze Maxi-Cash Financial Services Corporation Limited with the stock symbol 5UF and traded in SGX Catalyst Board. I found this company via SGX website stock screening feature. Another reason is that Maxi-Cash seems to be everywhere, at least in every major malls and MRT station. Okay, after looking at the numbers, my quick take for Maxi-Cash are: first, it seems to be a growing company. Two, it has a very high dividend yield. At the same time, it also has high dividend payout ratio. At the current price, it is fairly undervalued. However, given all the good points above, somehow I'm still reluctant to make any position for Maxi-Cash yet. How did I reach the above conclusion? Follow my video as I quickly discuss the company's profile, EPS since 2010, dividend, and other numbers. Please consider to subscribe because it means a lot for a beginning YouTuber like me. If you have any comments or input, do not hesitate to put in comment section. It'll probably help me to get more perspective and learn more. Alright, before getting into the data, I read out the disclaimer first. Disclaimer, this is an amateur video. My main intention is to record my own journey learning and practicing investing from scratch. Over the time, you may find that some inconsistencies in my analysis and conclusions. Please bear with me, my analysis is limited to the public data that I can access and the scope of my knowledge. Both of those change over time. This video shouldn't replace any financial advice and neither suggestion to take position, buy or sell in the stock market. Please conduct your own research before making any decision, but if you do your own research, I hope this video could be useful somehow. Now let's start from a brief company profile. Okay, Maxi-Cash Financial Service Corporation Limited was incorporated in Singapore in April 2008, 10th of April 2008, as a private limited company. It was listed in SGX Catalyst Board on the 22nd of June 2012. The group offers financial services in the form of pawnbroking and the retail and trading of pre-owned jewelry and watches through pawn shop and retail outlets. From the latest annual report, it operated in 48 locations in Singapore. The group's business is carried out through 3 business segments. The first one is pawnbroking business. And then the second one is retail and trading of jewelry and branded merchandise. And the last one, or the third one, is money lending. Okay, in terms of ownership, the 2020 annual report listed Aspial Corporation Limited as the highest shareholder with 55.64% of shares. Yeah, here, Aspial Corporation Limited. So here, as usual, I plotted earning per share for the last 11 years since 2010. I also added a horizontal green dash line as a guide to zero level. Earning below this line indicates that the company is recording a loss for that particular year. Quickly, we can see that Maxi-Cash general trend of increasing profitability. That's good. Over the last 10 years, Maxi-Cash only reported a loss once, and that was in 2010. There were a few record-breaking earnings in those 11 years, and they are 2011, 2012, 2016, and then 2020, which is last year. The 2020 earning increase is pretty surprising as the pawn industry was severely impacted by movement control during the height of the COVID-19 pandemic in 2020. So earning spikes are always good. The other factor that I am mostly interested in is the dip in earnings. Digging deeper to the cause sometimes reveal much more about the company. Okay, from the publicly available data, there are several notable dips. They are 2013, 2014, 2017, and 2018. The dip in 2021 may or may not be real, as information I have here is only for the first half a year. So 2021 still have half a year to go. Maxi-Cash reported that the dip in, that one is 2021, and now the 2013 dip is mainly contributed by the decrease in gold price and the cost of expansion. The lower gold price caused the decrease in pre-owned jewelry trading, which in return decreased the revenue from trading. At the same time, Maxi-Cash is expanding with more stores in 2013, which come with higher for staff costs, rental, and depreciation. Discounting the cyclical nature of the gold price, I think the dip is part of growing pain. Further slight decrease also reported in 2014. The company attributed the earnings shaving due to the increase in spending for expansion. So again, this seems to be just a growing pain. Maxi-Cash seems to reap the fruit of their investment as the earning grows massively for the next 2 years. That was in 2015 and 2016. The meteoric 2 years increase was followed by 2 years earning dips. As unfortunate, there was no information provided for the 2017 dip, except increase in competition. Maxi-Cash attributed the massive earning dip in 2018 to ongoing trade tension between US and China, although I failed to see the connection. Another factor reported was the fluctuating gold price with added competition in the business. Okay, then finally the dip in 2021, which is this year, was attributed to several factors in Maxi-Cash half-year filing. They are the lower gold price in first half of 2021 that results in lower profit for unredeemed pledges. Unredeemed pledge here I think means that the collateral that was not claimed back. There are also increase in staff cost and depreciation as Maxi-Cash expand locally and regionally. Okay, so far, I don't see any serious issue with the company's profitability. Next, we look at what are the perks as one of the shareholders. Let's look at the dividend. Okay, to see the sensibility of dividend payout, so here I plotted 3 layers of information. The first one is the dividend payout over the last 9 years, since 2012, which I plotted as red round markers connected by a thick red line, as we can see on the screen. On each of the points, I have annotated with 2 numbers. The number above is other dividend payouts in Singapore dollars, and the ones below are the dividend payouts ratios to the respective year's earning per share. As a comparison to the earnings, here I plotted back the earnings per share as a thinner line with the same color, red. At a glance, I have a little concern about the dividend payment. In most occasions, Maxi-Cash paid a very high dividend with respect to their earnings. In other words, the payout ratio is quite high. Some of the years are 2013, 2017, 2018, 2019, and then 2020, rather high, 71%, though not as high as 2018. My normal framework about high dividend payout are as follows. 1, on the positive side, the company may have so much cash that no other part of business require more cash. 2, the company has no more desire to grow, or they don't see any future growth that require cash. One thing that I can do to see the dividend sustainability is to make a circle back to the balance sheet and see if Maxi-Cash does have abundant cash. Okay, so to do that, I have added an ad hoc information. They are the company's cash and the current liabilities. The light purple bar, as we can see here, are the company's cash, and the gray one are the company's current liability. Okay, current liability is my first choice for department that require cash. current liability could cripple the company's operation as it needs to be settled in less than a year. What I want to see is that the cash reserves is higher than the current liabilities. From the ad hoc graph here, the picture doesn't look that pretty anymore. Maxi-Cash current liabilities is way higher than their current reserves. Yep, it appears to me, even though Maxi-Cash is really generous in giving out their dividends, it still struggles on other departments. Might be wise to cut down the payout ratio to reduce the debt burden. So I guess this is the first risk for Maxi-Cash. So considering the possible cash crunch, does the dividend payout or reward to shareholders justified? In that case, I will compare the dividend payout to their market valuation. In other words, their dividend yield. Now this is what a dividend hunter might be waiting so far. Here I plotted the average dividend yield per year as the round markers. At each markers I placed an error bar, which represents the range of yields over that year. The variation in a year caused by the volatility level of the share price. The yield increased if the share price decreased and vice versa. At a glance, Maxi-Cash has a fantastic dividend yield. Depends on your market timing. You can actually get 20% of dividend yield. And it happened, yeah, as we can see on the screen, and it happened twice for the last 8 years. That was in 2016. Yeah, even though the average is around 12%, but depending on your market timing, you could actually get close to 20% of dividend yield. And then the second one was last year in 2020. Even the lowest yield for the last 4 years was about 10%. That is definitely better than high interest bank deposit in Singapore. So my take now is high yield, high risk situation. But anyway, let's see the market valuation now. Okay, to see Maxi-Cash market valuation, here I plotted 4 layers of information. They are: for the first is the price, which represents market valuation of the company. It is also the easiest information that I can obtain. I can use the search term Maxi-Cash share price and it will pop me with this graph. But price alone is sometimes misleading for the value of the company and its prospect. So I'll include some fundamental indicators to help me to decide. The second layers of information is the 10 times earning multiply, which here I plotted as a dashed green line. 10 times earning multiply can be considered as the price where price to earning, that's the PE ratio, is 10. For me, I consider 10 times earning multiply has 2 purposes. The first one that indicates the price where I expect where I have higher chance to break even within 10 years. You could plot 5 times earning multiply if your investment horizon is 5 years. Second, as a consequence for the first reason, I'll consider share price above this earning multiply to be expensive. The third layer of information is 15 times earning multiply. With same principle as 10 times earning multiply, price above this indicator will be deemed as expensive. Here I plotted the 15 times earning multiply as dashed yellow line, just like the traffic light. I'll start feeling nervous if the price crosses this line, particularly for non-growth company. The fourth layer of information is the 20 times earning multiply. Here I plotted as a dashed red line. I will consider the share price to be super expensive if it ever crossed this line. For non-growth company, yeah. So now let's see what's going on with Maxi-Cash share price. I can see that the market are pretty cautious about Maxi-Cash. Historically, the price followed its 10 times earning multiply. I take it that market are hopeful for its growth, but keeping a cautious stance to its earning. So here I add the price annotation. Based on the current 10 times earning multiply, I would put a reasonable price at $0.2. Okay, as of 15th of October 2021, when this video was prepared, Maxi-Cash stock price was at $0.17, which is below the 10 times earning per share. In other words, the current price can be considered as undervalued. Okay, so in conclusion, it is clear that Maxi-Cash is a growing company, at least based on its growing EPS over the last few years since 2012. It has a very high dividend yield, but it also high payout ratio, so I'm a bit cautious on that. At the current price, the good thing is that at the current price, it is fairly undervalued, which I take as a cautious market valuation. Given the risk, for now, I'm not that interested to make any position for Maxi-Cash yet. I feel it's a high yield and high risk situation, which for now I don't think I'm ready for it. Though I'm rather tempted because if I can get 20% dividend yield every year, it means that in 5 years, I'll have all my investment return as a dividend. Okay, I may need more time to think about, but I'm not that interested and firm yet in making that decision for now. Okay, that's all for today. Thanks for watching. Don't forget to leave comments, and if this video is useful for you, please subscribe to my channel. It's free for you. And it means a lot for me, beginning YouTuber like me. Okay, I'll see you again in the next video. Bye bye.